the value of the dollar since I was born has declined by 94% to 6 cents. So inflation is a very cruel tax on people who believe in fixed dollars, but things can work out pretty well even during inflationary.
Inflation hit a new 40-year high and will soon get close to 9%. The Russia-Ukraine situation creates uncertainty. Now, the big question is, should you worry? And maybe, more importantly, how do you make money when inflation eats away 9% of your capital each year? In this video, we will look at what legendary investor Warren Buffett has to say about the topic. I'll be breaking down 3 pieces of advice from Warren that will help you make the most of inflation. Let's get to it. Inflation is a natural byproduct of the way our financial and economic system is set up. Because of how interconnected our production, supply chain, and consumerism have become, problems within that system can cause prices to rise rapidly. A great example of this is the COVID-19 pandemic, affecting production and supply chains. Our economy struggled to get back on its feet, so prices continued to rise every step of the way, from raw materials to the store shelf. This wasn't all that caused high inflation, though. The second part of this recipe for insane prices was due to how our financial system and the officials in charge. In response to the loss of jobs, scarcity of some products, and rising prices, the government printed trillions of dollars to give out to households. This helped families somewhat, but the consequences of it are hurting them much more. Over 80% of all US dollars in existence were printed during the first 2 years of the coronavirus scare. When the amount of money floating around suddenly balloons, its worth plummeted. When inflation begins to scare people, many begin to save as much money as possible. The rainy day fund seems more important than ever, so cash gets stashed. Well, it may seem counterintuitive, but this is possibly one of the worst things to do with your wealth in a time of high inflation. Let's back it up to the cause behind inflation. There are many more dollars than ever before, and inflation is becoming a self-fulfilling prophecy in terms of what it costs to produce and buy products. For this reason, cash is losing its value with every passing month. As such, it isn't a great idea to hold all your wealth in your savings accounts. So what should you do? Advice number 1 from Warren is this: invest in great businesses that can outrun inflation. If a company is managed correctly and has an effective business model, its value will rise sufficiently fast to keep you from losing wealth. We'll let Warren Buffett explain this using an example of a company he owns.
The businesses that will perform the best are the ones that require little capital investment to facilitate inflationary growth and that have strong positions that allow them to increase prices with inflation. And we have a candy business, for example, and the value of the dollar since we bought that candy business has probably fallen at least 85%, I would say, 80 to 85%. And that candy business sells 75% more pounds of candy than it did when we bought it, but it has 10 times the revenues, and it doesn't take a lot more capital. So that kind of a business, any business that has enough freedom to price to offset inflation and doesn't require commensurate investment or a huge investment to support it, will do well.
The most important point I want you to take from this is the phrase, enough freedom to price to offset inflation. This sounds complex, but is actually quite straightforward. A company that can reliably raise its prices enough to outrun inflation. This is key for businesses to succeed amidst inflation. If a company has the ability to raise prices without putting more of its own money into production, that company can easily stay afloat without being devalued along with its cash reserves. Although it's difficult for businesses to thrive during tough economic times, these are the ones that will be able to stay afloat the easiest and even generate some profits for you. Finding stocks like this isn't easy, and it isn't fail-safe. Inflation is an investor's worst enemy.
real return if you have low inflation. If you get into high inflation, as I wrote about back in 77, you could easily have the real return to investors get to a very, very low number, and perhaps negative. I mean, inflation can swindle the equity investor, as I wrote back then, and I used 7,000 words to explain why. I will be glad to send you a copy of that article if anyone's still interested. But inflation is the one thing that over a long period of time can turn investors' results in aggregate into a negative figure. And it's the investor's enemy.
If inflation is an investor's worst enemy, what other possible investments could be an alternative way to store your wealth and generate more? This brings us over to advice number 2 from Warren. Avoid passive assets that don't generate income. If you're investing in assets that simply hold your wealth as a store of value, that's perfectly reasonable. That being said, when inflation comes knocking at the door and the value of everything is dropping, you might be wishing you had more money coming in. This is why investments that produce profits are superior to those which are simply rising and falling in value at the whim of the market. Let's listen to Warren break this down for us.
You can take a broader example than that. If you buy an ounce of gold today and you hold it 100 years, you can go to it every day and you can coo to it and you can caress it and you can fondle it and 100 years from now, you'll have 1 ounce of gold and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do it all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years. You could buy the Dow Jones Industrial Average for 66 at the start of 1900. Gold was then $20. At the end, it was 11,400, but you'd all gotten dividends for 100 years. So a productive asset of any kind, a decent productive asset, is going to kill a non-productive asset over time. Now,
his reasoning is simple and straightforward. A productive asset will do more for you than a non-productive asset over time. His examples of farmland and stocks with dividends proves this. A similar investment would be real estate. Whether the market is hot or cold, and despite even the craziest downturns in the S&P 500, housing is a necessity. Controlling some of that will allow you to turn profit each month. Not only is equity stored in the property, but you have the ability to raise the rent you charge as inflation worsens. The price for homes may be at record high, but it's one investment that should always be a consideration. Okay guys, we've looked at a couple ways to make money during time of inflation like ours. 2 specific types of inflation that can safeguard and even grow your money. Investing in companies that have the power to raise their prices without raising their operating costs is a great principle, along with buying productive assets that can generate your income as well as storing wealth. Now, I'll give you one more powerful investment that can be much cheaper and produce insanely outsized results. This is probably one of Warren Buffett's favorite pieces of advice, especially if you're young. Before I give you this last piece of advice, I ask you to give me something in return. Please like this video if you've gotten any value out of it. So, Warren Buffett's last piece of advice is this: invest in yourself. And before you say, duh, what dull advice, hear me out. You are technically one of the most productive assets you will ever own in your lifetime. Warren Buffett will explain why.
The best investment of all, I mean, if you're the leading brain surgeon in town or the leading lawyer in town or the whatever it may be, you don't have to keep re-educating yourself to be that in current terms. You bought your expertise when you went to medical school or law school in old dollars, and you don't have to keep reinvesting. And you retain your earning power in current dollars.
While the concept of money that works for you is great and certainly holds some truth, many fervent investors forgot how much money they can get from working. Particularly when times are hard, your ability to produce income based on your skills and experience is invaluable. Companies go under, farmland dries up, and managing rental properties can become a nightmare. No matter what your investments are going through, you as an individual hold an incredible amount of value. If you aren't tapping into that, inflation will take what it wants. Investing into yourself doesn't always mean paying for a college degree. There are a multitude of paths you can take to become a productive asset for yourself. New jobs that challenge you build your experience. free online courses can build your skills. There isn't one straight answer for investing in yourself, but that's what makes you so valuable. If inflation reaches a fever pitch and brings this whole economy crashing down, you'll want to be prepared for the crash. Check out our recent video, 4 ways to make millions from a market crash, to get prepared. Better safe than sorry. See you next time.